We're looking ahead to August new home sales and the July Case-Shiller Home Price Index. That's both out tomorrow. We'll also get the final read of the second quarter GDP out this week on Thursday, followed by the August PCE out on Friday. Joining me right now is Lane Generational founder, managing partner, former Raymond James vice chairman, Fred Lane. Fred, great to see you. Thanks so much for being here this morning.
Good morning. Nice to see you, Maria.
We've been talking about the potential for a government shutdown, Fred, but of course we've got all this other economic data that could lead sentiment this week. What are you expecting to take precedence?
Well, first, let's speak to what happened last week with the Fed. I was really disappointed that the Fed did not raise because their so-called data dependencies suggested that they should raise, but of course they didn't. But the credit markets kind of spoke because basically yields went up and bonds went down. So that basically the bond market, which tends to be a pretty good barometer of what's going on, basically said inflation's continuing. It's clear that inflation is not under control. The PCE does not reflect the cost of gasoline, which, by the way, is going to increase because oil has had a spike, and it takes a while for that impact of higher oil to work through the refineries into the gas pump. Food prices are higher. Anybody who goes to the supermarket knows that. So this idea, and by the way, inflation did increase in August. It went from 3.7% to 3.2%. And remember, all of these increases are off an already high base. It's not as, if you look at pre-COVID prices, you look at COVID and prices today, they're high. We have a UAW strike on the horizon. That's going to potentially drive up car prices even more. And importantly, as we're trying to deal with higher prices, we have higher interest rates. So we have, if you're going to lease a car or borrow money for a car, those prices are going up. Okay, yep. So basically I look at it and I say this idea that we're going to have a soft landing, it's a fantasy. This is magical thinking. We're going into a recession, in my opinion. And it's going to be soon. And by the way, Europe's experiencing these problems to an even greater extent than we are.
Yeah.
And then aggravating all of this, of course, is government waste.
Right. The 10-year
The government waste is absolutely unbelievable.
6 basis points. Yeah. I mean, that's the issue, of course, and one of the reasons we're going to likely see a shutdown. But, I think one of the reasons, Mark Tepper, that we have been seeing the sentiment all so positive and beneath the surface upset about the actual macro story, as Fred is talking to us about, is partly because of the stock market. I mean, the market is up, what, 30+% or around 30% year to date. And that has a funny thing in terms of impacting sentiment, don't you think?
Yeah, look, I mean, the Nasdaq rally has been unbelievable this year, and it's been very, very, obviously bullish for investors because of the whole AI narrative. I was going to the Browns game yesterday, and I was talking with one of my buddies I was driving with, and we looked up the performance of the equal weight S&P 500 year to date. And that's telling a different story. That one's only up 1% so far this year, that's pretty wild given the fact that the cap-weighted S&P is up like 13 to 15%, somewhere in that range. But when you kind of look at, the major narratives that are going on right now, Fred, it seems that you and I we were thinking very similarly with regards to the Fed and what their actions should or shouldn't be. But it seems like consumers overall really need to come to terms with this higher for longer theme that we are going to see for the next several years. I mean, the Fed, they don't expect us to see a Fed funds rate below 3% until I believe it's like 2026. So, if you took out a 7% mortgage to buy a house and you thought you were going to refinance in a year or two at a 3 or 4% rate, that's not going to happen. And we as consumers have become addicted to this cheap money. I'd love to hear your take on it, Fred.
Well, I came to Wall Street in the 70s, and I saw interest rates in the double digits. You could have bought U.S. bond, 30-year bonds at, I think, 12%. But, of course, no one was predicting a diminution of inflation. No, there's no question. Inflation's going to continue. By the way, I'm glad you mentioned the equal weighted index, because this stock market performance is illusory. It does not reflect the broad markets at all. All right. This is, by the way, the other area that has been selectively pretty good over the last year or so has been energy. But you know, and other commodities, uranium has had a remarkable appreciation as well. But you know, the fact of the matter is, we've underinvested in commodities, we've underinvested in oil and gas, and a lot of our inflation problems are ones that we're asking the Fed to address. But the Fed doesn't determine fiscal policy; it only determines monetary policy. And we have such wasteful, in my view, spending going on in Congress. Kind of across the board, by the way. It existed. It is not just a partisan issue, but our policies are clearly inflationary. Our policies, this whole Inflation Reduction Act, it wasn't an Inflation Reduction Act at all. It was basically an Electrification Act. And by the way, that's
the president has
inflationary.
admitted that. Yeah, the president has admitted that, actually.
Right.
He said that he named it. He named it wrongly. Yeah, right. All right, Fred,
I mean, listen. The fact of the. All right. Very good.
Thank you so much.
Thank you.
Fred Lane joining us this morning.